Welcome to Hong Kong Brief. The content of the briefing includes: Xi set to discuss China stock market with financial regulators. Billionaire Cheng family seeks to oust Giordano CEO after failed buyout. McDonald's looks to boost China presence with 1,000 new outlets. Hong Kong stock surge on China market intervention, measures to stem rout. Blackstone to back ex-Millennium Asia co-CEO's new hedge fund. Xi set to discuss China stock market with financial regulators. Bloomberg. Chinese regulators, led by the China Securities Regulatory Commission, CSRC, plan to update President Xi Jinping on the state of the market and the latest policy initiatives, according to reports. The move highlights the pressure on Chinese authorities to stop the slump in stocks after measures over the past few months failed to lift investor sentiment. Since their peak in 2021, $7 trillion has been wiped off China and Hong Kong equities. Billionaire Cheng family seeks to oust Giordano CEO after failed buyout. Bloomberg. The family of Henry Cheng, the top shareholder of Giordano International Limited, is seeking to remove Peter Lau from his role as CEO of the company. They want to appoint Colin Currie, the former China managing director of Adidas AG, as the new CEO. Additionally, they want to appoint two of Henry Cheng's children as non-executive directors of the board. The Giordano board is seeking legal advice on the matter. Giordano's shares fell after the announcement. The Cheng family had previously attempted to acquire the clothing company in 2022, but the deal failed. Giordano is expected to report a profit increase for the year. The Cheng family has been facing a succession saga in recent months. McDonald's looks to boost China presence with 1,000 new outlets. Bloomberg. McDonald's plans to open 1,000 more outlets in China this year as part of its expansion into lower-tier cities. The fast food giant is seeking to establish a bigger foothold in lesser-known Chinese cities as bigger markets become saturated. McDonald's aims to have 10,000 mainland restaurants by the end of 2028. The company also noted that sales in the Chinese market are becoming more reliant on promotional campaigns, and it will do what it needs to maintain its competitiveness in the market. Hong Kong stock surge on China market intervention, measures to stem rout. South China Morning Post. Stocks in Hong Kong surged as China's sovereign wealth fund, Central Huijin Investment, stepped into the market to help maintain stability. The Hang Seng Index rose 2%, the most in 2 weeks, while the tech index rallied 3.3%. China's securities regulator also pledged to crack down on market manipulation. The Shanghai Composite Index climbed 0.9% and the Shenzhen Bourse Gauge advanced 1.2%. Hong Kong and China's markets are currently the worst performers globally this year, with stock gauges falling more than 7%. Blackstone to back ex-Millennium Asia co-CEO's new hedge fund. Bloomberg. Blackstone will back a new Asia-focused hedge fund run by former Millennium Management executive Jonathan Cheng. The fund, called Arrowpoint Investment Partners, is expected to start with around $1 billion and will trade across equity, fixed income and commodity markets, using fundamental and computer-driven strategies. The fund will have offices in Singapore and Hong Kong. Cathay Pacific Airways plagued by flight disruptions. Nikkei Asia. Hong Kong-based Cathay Pacific Airways' reputation as a premium operator has been damaged by a series of staff shortages, which resulted in the cancellation of around 70 flights over the Christmas and New Year period. The company has responded by cutting 12 flights per day on average until the end of February to prevent disruption during the Lunar New Year travel peak. The cancellations have been blamed on a shortage of pilots, which has arisen from pandemic-related layoffs and pay reductions. Cathay has relaxed its requirements for co-pilots to join training that qualifies them to serve as pilots in command, reducing flight hours from 4,000 to 3,000. The airline has faced criticism for blaming pilots when the real issue is a lack of staff. Cathay has faced severe challenges during the pandemic, which forced it to introduce restructuring measures that saw employee numbers fall from 32,900 in June 2019 to around 21,900 in June 2023. The company is trying to rebuild its workforce, with plans to add 4,000 employees by the end of 2023, and a further 5,000 by the end of 2024. Abu Dhabi Wealth Fund is said to weigh stake in Wanda Mall unit. Bloomberg. Abu Dhabi Investment Authority, ADIA, is considering purchasing a minority stake in Dalian Wanda Group's mall operator, Zhuhai Wanda Commercial Management Group, according to sources. ADIA has held preliminary discussions over the potential stake purchase and may buy shares from existing holders. The move comes after billionaire Wang Jianlin gave up control of Zhuhai Wanda in December in order to avoid repaying pre-IPO investors. Private equity firm PAG and other investors currently hold a combined 60% stake in Zhuhai Wanda, while Wang holds the remaining 40%. ADIA's potential stake purchase is dependent on Zhuhai Wanda securing 30 billion Chinese yuan, $4.2 billion, in financing from banks. China margin debt drops most since 2016 amid stock rout. Bloomberg. China's margin debt for stock trades has fallen by the most since early 2016 as investors have rushed to unwind leveraged positions in response to the country's deepening stock slump. The outstanding balance of margin debt fell 2.7% on Monday, the most since January 2016. The recent drop in margin trades has coincided with a heavier sell-off for small-cap shares. The total amount of leveraged trades dropped to 1.42 trillion Chinese yuan, $197 billion, the lowest in a year. Alibaba's 80% loss may extend on competition worries. Bloomberg. Options traders are forecasting further pain for Chinese e-commerce giant Alibaba, with the options skew showing increased bearishness ahead of the company's earnings report due on Wednesday. Alibaba's shares have tumbled nearly 80% from a 2020 record high, with persistent deflationary pressure and declining wages driving a price war. Stalwarts Alibaba and JD.com face new entrants, including Douyin Mall, while discounters like Pinduoduo are winning in the price war. Alibaba spent $9.5 billion on share buybacks last year, and may spend half of its free cash flow on buybacks. Hong Kong Church Island ECC acquires floors in building home to Sunbeam Theatre. South China Morning Post. Christian Church Island ECC has acquired several floors in QFAI Mansion in North Point, Hong Kong, as its future permanent home in Hong Kong. The floors were sold for 800 million Hong Kong dollars, $102.3 million, but the buyer was not disclosed. The property is expected to be redeveloped into a landmark residential or commercial project on Hong Kong Island. The church currently holds Sunday services at 633 Kings Road. Private equity in China heads for exits amid three-year stock slump. Nikkei Asia. Investors in China's private equity, PE, and venture capital, VC, sectors are struggling to find new investment strategies due to a slump in Chinese stocks over the past 3 years. The first 3 quarters of 2023 saw indicators for fundraising, investment and exits by PE and VC firms all decline, according to equity investment research firm 02 IPO Group. The number of new funds dropped by 2.1% from a year earlier to 5,344, and the scale of these funds fell 20.2% to 1,352 billion Chinese yuan, $187 billion. In the first 9 months of last year, PE funds made 6,510 investment deals in China, down 25.9% from the same period in 2022, according to 02 IPO. The value of those investments dropped 31.8% to 507 billion Chinese yuan. Meanwhile, no new sectors have emerged as a magnet for capital, and PE firms are finding it difficult to exit their investments as the Chinese stock market continues to slump. As a result, PE investors are increasingly turning to mergers and acquisitions for their portfolio companies instead of initial public offerings. Wall Street snubs China for India in a historic market shift. Bloomberg. Investors are withdrawing billions of dollars from China's slowing economy and redirecting their funds towards India, according to the Wall Street Journal. Wall Street firms, including Goldman Sachs and Morgan Stanley, are increasingly endorsing India as the prime investment destination for the next decade. Investors are drawn to the country's contrasting trajectory with China, with India's economy set to grow at 7% and its stock market predicted to increase in size as a result. The country's population is largely poor and its stock markets are expensive, but investors are still making the crossover as they believe the risks of betting against India are greater. India's expanding infrastructure under Prime Minister Narendra Modi has helped attract global capital. The country is viewed as a potential counterweight to China and is increasingly seen as a viable alternative for manufacturing. India now accounts for more than 7% of iPhone output and is investing trillions of rupees in upgrading its infrastructure. Investors are also attracted to the country's vast ecosystem of technologies aimed at pulling more people into the digital marketplace. However, some challenges remain, including stretched valuations and the perceived threat to stability from Modi's social agenda. Asia hedge funds win with long oil wagers, short China consumer. Bloomberg. Despite the challenges faced by China-focused hedge funds in recent years, some funds have managed to deliver strong returns. The Sino-Vision Greater China Market Neutral Fund, Ubiquint Asia Pacific Quantitative Hedge Fund, Taroa Master Fund, and Long Corridor Alpha Opportunities Fund all gained more than 25% in 2021. These funds have benefited from divergent bets on China during a period of market turmoil. The strong performances highlight how some funds are delivering for investors despite the increasing pressure facing China-focused portfolios and Asia funds that lean towards the Chinese economy. Get out of Hong Kong, Messi and co. told as fans warn Japan risks heartbreak too. South China Morning Post. Inter Miami, an American football club, faced backlash from angry fans on social media as they traveled from Hong Kong to Tokyo for their preseason tour. The club was criticized for the non-appearance of star player Lionel Messi in their match in Hong Kong, with fans calling the tour a scam and accusing the club of overcharging for tickets. Some fans even warned Japanese spectators that they may also face disappointment, stating that Inter Miami is a football scam and does not allow Messi to play. The club's social media posts were flooded with negative comments, with fans expressing their disappointment and anger. Inter Miami is scheduled to play a match against Japanese J1 League champions Vissel Kobe in Tokyo on Wednesday. Hong Kong shares face risk from expiring Korean exotic notes. Bloomberg. South Korean structured notes tied to the Hang Seng China Enterprises Index, HSCEI, are set to expire in the first half of this year, potentially leading to selling pressure on Hong Kong stocks. The notes have a notional value of $7.7 billion, and as they mature, Korean banks that sold the products will unwind hedges by exiting long positions in index futures. This unwinding may create volatility and arbitrage opportunities and could have a negative impact of up to 10% on the HSCI. A total of $11.6 billion worth of these products are set to mature by the end of the year. That's a wrap for today's news from the six-dimensional world. Let's quickly summarize what we've learned. 1. Chinese regulators are set to discuss the state of the stock market with President Xi Jinping as they try to stop the slump in stocks. 2. The Cheng family, the top shareholder of Giordano International, is seeking to remove the CEO and appoint a new CEO and board members. 3. McDonald's plans to open 1,000 new outlets in China this year to expand its presence in lower-tier cities. 4. Hong Kong stocks surged after China's sovereign wealth fund intervened to maintain stability, and the securities regulator pledged to crack down on market manipulation. 5. Blackstone will back a new Asia-focused hedge fund run by a former executive of Millennium Management. 6. Cathay Pacific Airways has faced flight disruptions due to staff shortages, leading to flight cancellations. 7. Abu Dhabi Investment Authority is considering purchasing a stake in Dalian Wanda Group's mall operator. 8. China's margin debt for stock trades has dropped significantly amid the deepening stock slump. 9. Alibaba's shares continue to decline due to competition worries and a price war in the e-commerce industry. 10. Christian Church Island ECC has acquired several floors in a Hong Kong building for its future permanent home. 11. China's private equity and venture capital sectors are struggling due to the stock market slump, leading to declines in fundraising, investment, and exits. 12. Investors are withdrawing funds from China and redirecting them towards India, viewing it as a more promising investment destination. 13. Some China-focused hedge funds have delivered strong returns despite the challenges faced in recent years. 14. Inter Miami Football Club faced backlash from angry fans in Hong Kong, criticizing the club for the non-appearance of Lionel Messi and calling the preseason tour a scam. 15. South Korean structured notes tied to the Hang Seng China Enterprises Index are set to expire, potentially leading to selling pressure on Hong Kong stocks. Now, let's dive into some analysis. It's clear that China's stock market has been facing significant challenges, with billions of dollars wiped off equities. Chinese regulators are under pressure to turn the tide and stop the slump, but their measures so far have failed to lift investor sentiment. The situation is further complicated by issues in the private equity and venture capital sectors, which are struggling to find new investment strategies amidst the stock market downturn. On the other hand, India is emerging as a prime investment destination, with Wall Street firms redirecting their funds towards the country. India's expanding infrastructure and potential as a manufacturing hub are attracting global capital. However, challenges remain, including stretched valuations and concerns about stability under Prime Minister Narendra Modi's social agenda. As for specific companies, McDonald's plans to expand its presence in China's lower-tier cities, while Cathay Pacific Airways is facing disruptions due to staff shortages. Alibaba's shares continue to decline amid competition worries, and some China-focused hedge funds have managed to deliver strong returns despite the challenging environment. And finally, we can't forget the power of angry football fans. Inter Miami faced backlash from disappointed fans in Hong Kong, and they took to social media to express their anger and disappointment. Let's hope the situation improves for the football club as they continue their preseason tour in Japan. That's all for today's six-dimensional world news. Don't forget to share your thoughts in the comments section below. What are your thoughts on China's stock market slump and the shift of investment towards India? And how about those angry football fans? Let's keep the discussion going. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.